Hi traders, welcome to this week's pre-weekly market review by Trade Genius Group. We are looking at the Euro pairs this week. That is due to the European Bank's stress test, which has been taking place over the weekend. And we're going to look at some other significant technical pairs also to prepare you for the week ahead. Before we dive into this week's market analysis, let's look briefly at last week. Probably the major move that came out was from Canada, and they are definitely joining the other countries of the world's largest economies to basically come out and state inadvertently that they are in no rush to increase rates at this given point in time. They can join a whole handful, including the UK, who last week came out together with the MPC under the Bank of England, which basically voted to keep rates on hold at the moment. The US obviously not quite being very clear about when they intend to raise rates. 1 minute it's 2016, 1 minute they're not sure. They may carry on with further QE. So can join that to the long list of countries right now whose future interest rates are undecided. Technically, this pair also, the dollar CAD that is, has a large chance now of seeing further declines. Here we would see the dollar CAD selling off if it breaks out below this lower support line that you can see there. Although last week's announcement could weaken the CAD, and we do see a reversal doji candle there as the last candle in this series. So keep a close eye for this point there on that daily make or break signal for the dollar CAD. Without further ado, let's move on to this week's technicals. The major pairs we're looking at, as we said, are the euro. So let's look at the euro dollar to begin with. Today, 25 banks failed the European stress test, so not a good sign for the Eurozone at all. If we look at this Euro-USD pair, obviously we had a big double bottom there that I've just circled for you at the beginning of the month, and since then we've seen another doji candle there I've just circled for you that also gives likelihood to further increases in price pullbacks. However, this news that's taken place today over the weekend does threaten to open up with a gap to the downside because it was negative for the Eurozone. I've shown you there on the upper levels just above 130, 180, a previous gap in the market back in the summer. And so if prices do continue to rise and stay above the major double bottom that we had, obviously that level would be the next target. We've now moved on, guys, to the EURJPY daily chart. JPY has been weakening obviously in the long run, but recently has been showing some strength, and finally this strength seems to be subsiding with this recent pullback. So the euro yen here just showing you a megaphone pattern. You can see quite clearly their prices ranging from tops to bottoms, where you have higher highs and lower lows, and the gap is getting more and more volatile. Last week we saw a reversal spike. You can see that just after October 14th, and I will soon highlight that. And so markets tend to be heading right up in this range direction towards the 142 level. Now that's quite a way off. In fact, that's over about 800 pips or so off. So you might want to bear in mind that there might not be such a clean ride to getting to the top, but it might be rather choppy. And obviously your lower limits around 134 are firmly anchored in place if you are trading that long term with low risk and looking for stops. Okay, so moving on now, the S&P 500, we've been speaking about this for a long time. We've written articles on it on our blog, and you should check our blog for those. We expected it to actually rise over the next few months, having had some quite sharp sell-offs, and we saw the initial move on that bullish reversal just last week. It was a big shocker. Right towards the end of last week, we saw a lot of reversals taking place day after day on that S&P, and so it once broke out of the range, and we're now right back in that range again. So you could argue in the long run this would appear as a false breakout. I've just circled it to you there on the chart, and now we're back inside the range as I'm showing you with this arrow, and so obviously things tend to be looking back up again towards the 2000 mark, which gives you a lot of time to think about maybe jumping in on this sell trend once more. We do have midterm elections coming up also in the US November 4th, so keep an eye out for that, and sometimes we can see the market actually bolstering up sentiment and sort of increasing confidence because of those midterm elections, and maybe there's some hidden agendas there amongst the parties to sort of bolster the economy and keep things looking good and prosperous. So very much worthwhile your attention, traders. Okay, still to come this week, we have a lot of news, obviously, that's going to be affecting those Euro USD and Euro Yen trades we showed you. Obviously, the bank stress test does leave risk open there that the market may open with a gap to the downside. It might be short-lived though, so keep a close eye on that one. And Monday, we're coming straight in with German IFO business climate figures, so that will also play a role. Tuesday, US consumer confidence, always a very, very big number, as US is pretty much a consumer-orientated economy amongst others. Basically, you want to keep an eye on that number, as it's going to have a huge impact on the dollar, and so you can track that alongside the dollar index, for example. Wednesday, you cannot go without saying that there is the FOMC statement, and that is going to be a very significant time for the dollar, certainly as we get towards the end of the year, so stay tuned for that. And Friday's Japanese yen monetary policy statement will also be important for you guys to keep an eye on if you are tracking that dollar-yen pair. So all in all, a very big week of news, a lot to come on the markets. We are in the final quarter of 2014, and you want to be careful because history tells us that the last 3 months of the year, certainly over the last few years, has been very, very volatile, and traders have found it pretty tough all in all. So keep risk management pretty tight and have a great week.